Hey guys, welcome to another Monday morning chat with Rozella and Steffani. And I'll let you guess who's who on our video this morning. Hi, ladies. How are you doing this morning?
Good.
Good, good.
Yeah.
Well, once again, we were talking off camera about two topics, so we're going to combine them all in one because they kind of fit. We're going to talk about first-time home buyers, but I was also wondering about June stats for the area where Rozella and Steffani are at. And they said, well, they go hand in hand. So we're going to just put these guys together for you.
They go hand in hand today. Maybe not every day, but today they do.
What shall we talk about first?
Let's do June 1st, since that's probably going to be a little shorter and an easier blurb. Yeah. Do June 1st?
Yep.
Okay. So June was a little bit of a different month here in Spokane. That's kind of why we wanted to share it. And it's definitely reflecting, I think, and us realtors are aware of it. So these numbers aren't very surprising. But here we are. Sales are down.
Wow.
For the month of June, sales are down. How much are they down, Steffani?
13.9%, which is a decent number, actually, in comparison to what we've come off of the last few years.
That's a lot.
Yeah.
So totaling only 537 sales, whereas last year at this time, there was 624. So almost 100 less within the month of June. However, our median price point has not changed. We are still holding right at $425 for our median price point. How's inventory looking?
So inventory was actually up 31%.
Really?
Yeah.
I'm surprised.
Yeah, new listings are up 2%. So with that kind of starts reflecting, is it a buyer's market? Is it a seller's market? And that's how we're going to tie in our first-time home buyers, because this is showing that buyers might have a little more power.
Very good. All right.
Yeah. This one is a really fun one for me because it really speaks to my heart personally, if you will. Because that once upon a time, being a first-time home buyer myself and doing it by myself, I was like, well, how in the world is this going to look? So this is why it ties into the lending components, because you and I had to get pretty creative through a few deals over the years. So
yes, we have. That's for sure.
I thought it would be fun.
Well, that's good. So what I hear is that inventory's up. That's so amazing to me. Prices are level, but they didn't buy nearly as many. It's 13% down the sales. Is that what you said? That is very interesting. So
13.9. So if we just want to round up to 14, let's just round up to 14, honestly.
Absolutely. So before we leave that topic, what is your conjecture of what's going on here?
Well, June is a busy month in our community, which I do think plays a really big role. School is out in June typically here. So all of the local schools are out. Colleges are also out, and our community has a lot of colleges. So then you have the graduations everywhere in June. So between the high school graduations, the college graduations, that takes up a majority of June. Also summer starts, kids are out. So parents go on vacation. They take those first couple weeks to head out of town. And that's also right when our weather kind of gets warm. And so that first initial burst of heat kind of keeps buyers indoors, and they're not really wanting to do house shopping.
Or if they're outdoors, they're at the lake.
Right. We also have a lot of local events. Hoop Fest was another big one here locally that it shuts down the city. So it makes it hard to even navigate through. So showings that weekend are, so there's June. June is gone already.
All right. So what is your prediction without looking at numbers for July?
So what she was just referring to is what I would say is very much so the seasonality that we see in our market center, particularly. July is kind of off to a similar start. So I think we're going to kind of stay slower throughout the summer, if I'm being totally honest. And it could lead into the fall and winter potentially.
Hoping for a really busy fall.
I think that everywhere it's kind of, and I would say not everywhere, but particularly here, I feel like first-time home buyers, this would be like, again, a good time for them to go out and start shopping because
the competition is there's not a lot of competition right now.
Yeah. And you have a lot of buying power, like we said. So I think that it'll be slow in the sense that people can make that kind of educated decision, if you will, and be a little bit more picky, which I think is a good thing.
So let's move forward to first-time home buyers. I'm going to define a first-time home buyer from a lending perspective, guys, so that everyone knows who we're talking about here. From our perspective, a first-time home buyer is someone who has not purchased a home in the last 3 years. So if you own a home, obviously you're not a first-time home buyer. And if you haven't purchased a home in 3 years, you're a first-time home buyer, which means if you bought one 4 years ago and you sold it, and you haven't owned one since, you're a first-time home buyer. The advantages of that is there are certain programs that help first-time home buyers get into homes with low down payment options, like Fannie Mae and Freddie Mac each have one called Home Possible and Home Ready. And they're 3% down programs. There's lots of stuff to choose from here. If it's in the right demographic area, the rates are very, very aggressive because Fannie and Freddie are trying to lend into that area. And so we can talk about that maybe even on a separate call because it's kind of a big topic all by itself. But you have low down payment options. Rates are about the same. We've been all expecting them to come down this year, but they're kind of stubbornly hanging in there. But not bad in the 6s, which is good, I think, for rates. I know it's not 3 like we used to have 2 years ago, but it's better than 7. So first-time home buyer, lady, what is the opportunity in the area now, given what you just told us about prices and everything for first-time home buyers?
So I feel like I want to actually piggyback off of your point of making 6.5%, I think is what you said. We're kind of sitting at as an average. Okay, 6.
Probably high 6s right now.
So just to put that into another perspective, I don't know if you've been car shopping recently, or any of our viewers have, but interest rates over on that side are looking towards like the higher 7s, 8s, and all the way up into 12 sometimes, depending on what you're looking at. So my point of bringing that up is when it comes to the house shopping, think of it like shopping for a car, essentially. I know that's
I'm just trying to think of where you're going with this. I'm waiting for the punchline. I'm like,
you're not always going to check off all of your bells and whistles, obviously. Sometimes you have to work with what you have, but that also gives you leverage with your interest rate, because your interest rate for purchasing a house is significantly lower than what it would be if you're using purchases elsewhere. So it's an investment. So look at it like an investment when you're going in. So even to the point of the house that we're going to go tour today, it's marked at a lower price point because it needs some love. And with that, when you go out and you're shopping as a buyer, utilize the loan programs that you have, which is what on the back end, like, can they get in seller concessions?
Sure. You can get, well, let's broaden this a little bit into the government loan category. So if you're in the conventional Fannie Freddie, who I talk about here, and you're putting a low down payment down, we're going to allow the seller to contribute up to 3% of the purchase price toward the buyer's closing costs, which is a pretty good chunk, right? If you're in the world of government loans, FHA, USDA, and VA, you can get, there's slightly different guidelines. So I'm going to summarize it. Okay, you're going to get somewhere between up to 4 to 6% of the selling price that the seller can contribute to the buyer's closing costs. So it's significant. And rates are lower with government loans typically than conventional. So yay, that's good. FHA, which we talked about in previous chats here, lowered their mortgage insurance premium, their monthly premium, 2 years ago now. So it's actually fairly competitive with Fannie and Freddie, especially if you have a credit score below 700. If you have a credit score in the mid 600s, 660, 670, somewhere in there, FHA, if you're VA eligible, it's great. Or USDA has some very competitive rates that they're really looking. And USDA is 0 down, VA is 0 down, FHA is 3.5% down. And it can be gifted. So there's some really good options there for first-time home buyers.
Okay. So with a house, and I think you just had a closing too, where they were a buyer that could get closing costs or rate buy down, stuff like that. What was the difference for your client? Because I know that you had to kind of restructure that deal.
In payment? Oh, it makes a huge difference. Are you, as far as like the buying it down and having the seller concession, there was a difference of like $9,000. Seller concessions, if you are able as a buyer to get them, that'll save you tremendously. So between what you as a lender can get them and what us as realtors can negotiate on their behalf, is that where you're going with that? Was the amount? Yeah. Potentially as a first-time home buyer, you can get.
How much for your client did it save him? Like
$9,000.
Okay, so $9,000. She had just had a buyer that got to save from having to come up with that type of a cash. So for our viewers, like that's my point too, is like sometimes it's a lot easier and more attainable to actually get yourself into a house, especially in this market, like we said, with inventory being up, but your sales competition is lower essentially, and then utilizing the different financing options that you have, which at 6%, that's really not that bad. So
are you talking about, now I get where you're going with your bells and whistles. if you're willing to put in a little sweat equity into the properties as a first-time home buyer to get into that purchase price that you need to be at to make it affordable and make sense, you can get seller concessions on top of it. That way you also have funds to do a little repairs on the back end. Yeah, very doable. That's the answer you were looking for as a first-time home buyer. Very doable.
Very doable. That summarizes it rather well.
Well, I wanted to put it into like a little broader spectrum to maybe liven it up a little bit, and I don't know, just give a different perspective, because I know there's so many things that people can watch and get information on for first-time home buyers, like rates, all that stuff. But like,
okay, so let's say on a total side note off of hers, let's say you're a first-time home buyer and you're like, yeah, I'm not handy. I can't do the sweat equity. I'm not that person. We also have recently done videos on new construction because the builders are still able to offer that buy down on the rates. Some of them are right at 6 or even below 6. You can get with builders around in the like 5.75 interest rate. And so new construction, brand new homes, some of the spec homes in communities are around $300,000, $350,000, which is still a phenomenal price, especially if you look at $300,000 inside, like in Spokane area, the type of home that you're going to get for that price point. So that's also an option that I like to note for first-time home buyers too.
Yeah, and if it's not new construction and you need some handyman work done, you can do the rehab loan, conventional and FHA.
Yeah, because those honestly aren't as scary as people think.
No, they're not as scary. You'll get bugged because it's going to take longer. You're going to be unhappy a couple of times, but we're going to get it closed. It's a more involved process. You need a contractor to come in and they're going to say, we're going to fix the kitchen and do this and do that, fix the roof and do this and do that. It's going to cost this much money. We'll need to do another whole program on the rehab loan stuff, but you can purchase a home, get rehab funds, remodel the home before you move into it with a variety of loan options.
Yep. Let's go for one final topic, if you're good with that, of like the lending for new construction. So like the
Absolutely.
VA. Some of our favorite clients to work with are our service members, and that loan program that they offer is something that, like you mentioned before, is 0 down. Is that also applicable to a construction loan?
It sure is. VA, FHA, USDA, conventional, all offer construction loan possibilities now under the same basic guidelines that they have, which means VA is 0 down, USDA is 0 down. Isn't that amazing? Those are relatively new programs in the industry. FHA is 3.5% down. Conventional is going to require a larger down depending on your situation. It could be 10%. It might be as high as 20%. There's a lot of options there. Yeah, to purchase land and build a brand new home.
Okay. And then for a VA buyer, let's talk for a second on that, because if they have 0% down, what do you think we would look at for total cash to close it? Somebody would need to bring to buy a house in today's market.
What price point?
Well, let's go for average.
Average is $425,000.
$425,000, and VA will allow up to 4% seller contribution toward closing costs. So there's $16,000 and some odd dollars that the seller can pay toward VA closing costs. That's no money out of your pocket if you're a veteran and purchasing a home, or active military and purchasing a home, or construction.
So realistically, from our side of that, as an agent, what that means to me is like, you can potentially go in, write an offer on a property and negotiate to get, especially because like we said, with it being slower, with our sales as a VA buyer, you can potentially go in and ask for that 4% in closing costs, which means you could essentially get into a house for no money. And then your payment would be about, what do you think if it was around $425 for a VA right now?
You're going to ask me to be guessing on that one. I'll have to pull my handy dandy calculator out and be more specific.
Or I have mine, so you can give it to me and I can do it.
So, fun little thing that you can do. Let's say the loan will only, from a lending standpoint, you do 4%. They'll only allow seller concession at 4%. But let's say your seller agrees to giving you 5%. What can you do with that extra 1% that's left over? Can you use it to buy down the rate?
It's a very good question. The answer is no.
Okay.
But you can use part of the 4% to buy down the rate.
Can you as a lender do anything with that extra money?
Well, it gets a little more specific than that. I was kind of glossing over it. The really kind of no is the answer, Rozella. It's a good question. However, it's a little more fine-tuned than that. It's 4% plus underwriting fees, I believe. So it can be a little over 4%, but I've had underwriters disagree with me on that. So I don't push the envelope, but I know you can do it because I've done it with other underwriters that said, yeah, they look in the guidelines and they can do it. Rarely do you have to kind of fine tune it to that tight. Usually 4%. I mean, 4% of 400,000 is $16,000 to use toward closing costs. So you can cover all your closing costs pretty well with that.
Just curious, could you buy down your rate with the remaining?
You can buy down the rate. Yes, you can. And you can do, but within the 4% result. You can't throw the rate right on top of it, okay? There are at least 5 other topics that we should talk about that came out of this, including rate buy downs and how they work. We've talked about temporary buy downs before and permanent buy downs before, so I think that another one might be coming out of this. And certainly construction loans and all of that. So we'll have some topics right here for future videos for y'all.
Perfect. Yes. Which is also, again, why I wanted to go the fun broad spectrum today, because we just covered a lot. Can you come back before?
All kinds of good stuff pops out of it.
Yep.
So guys, if you're watching on our YouTube channel, comment there. We like to answer the comments, and it also feeds into videos that we do for the future. We're happy to do that. And certainly, you'll see the contact information on the screen. Give Steffani, give Rozella, give myself a call if you have any questions about any of the above or anything else pops into your mind that's related to this. We appreciate it.
Yeah, thanks, guys.
Thank you.
Thank you, ladies. Talk to you next time, okay?
Next time.
Bye-bye.